Back in
Another
Zoom.
Debbie. We got Susan in there. Oh wow, we've got. I'm not gonna be able to keep up. Chris, AJ, Ronald, Arnold, Patrick. Hello, hello. Hey, Ed, Michael. Sorry if I don't shout out every single person. This room is absolutely packed. Obviously, for me, this is a big, big day. I'm sure you guys, if you've been following me at all, you know what I'm going to say next. I can't freaking wait to talk about the income machine. I've been working my butt off on this thing for 6 months. We're going to talk about that today. We're going to talk about some other stock picks that we like. The market's cooking. Anyone making some money on those VIX shorts we took on Friday, expiring tomorrow? VIX down 9% since we took those trades. Anyone cooking with some cash on VIX to the downside? Yes, yes, yes. All right. Hank's already out with money. Love to see it. Linda, all right, making some money. Now I'm pretty pumped about VIX because, like I said, 9% in one day. I'll take it. Still holding it. I'll probably hold through expiration and try to get the full shebang on that one. Hank made over 31%. Love to see it. But I mean, Graham Oklo. I mean, I like VIX being up 9%. Oklo's up 9% every dang day.
Dude, it's amazing. It's amazing stock. I wish I didn't sell it at 47 or whatever because it's at 70 now.
It's unbelievable. Yeah, we cashed out early. I mean, for those of you jump traders, we cashed out early for a measly 210%.
Mm.
Should have hung on for the 300%. I mean, it is an absolute monster. Oh, Maggie took VIX early on
250%. You
Friday.
should be embarrassed.
I know. I know. Hey, Kane. Good morning.
Good morning. How's it going?
Doing well. Always a good day when the market's up 1%, right? Can't
There you go.
can't complain too much about that. But I'm curious. I think we talked on Friday, or at least I won't speak for Graham, but I thought we'd have a pretty short term kind of risk back on, because basically, if in super overgeneralized terms, I don't think that Middle East conflict is some actual huge surprise, even though it is newsworthy and noteworthy and sad. I don't think it's like an actual shocking event. So I thought the short term would be pretty much sell back off that, and then long term, as we get more headlines, we'll get another more meaningful reaction as the U.S. determines its level of involvement and all that sort of stuff. So I think we're in a maybe a little bit now overswung the other direction, but curious what you and Roger think about what we have kind of in the short term here, based on, once again, a very news driven market.
Yeah, for sure. Definitely news driven. And you never know exactly what's going to come out next. So you always want to be a little careful in this type of environment because it's not predictable and it's not something that you can really trade ahead of time. You can only react to it. So for me, I thought that we might pull back a little bit further than we actually did. This market is definitely stronger than I expected, but we also have a lot of overhead resistance. I wouldn't be too exuberant about it until we get to those all-time high levels. So where we are right now, between 600 to 605, and then again to 605 to 610, 610 to 614, those are all resistance levels in the market. So yeah, you could see this bounce and you can see it go up, but how much upside is there? And then if you do, if you say, hey, well, maybe I want to short all of this exuberance, well, you're going against a trend inside a very strong market. So that's not exactly something that you want to do either. So I think we're all going to talk about, like, this week what we're expecting and how we would play stuff like that.
Yeah. Yeah, and I won't get too far ahead of myself, but I think you're exactly right. I think the theme for me is kind of creating room for error on a lot of these trades. That's really what I've been trying to do a lot of. So I'll share a couple examples of that and a couple tickers that I like doing that on. But I know we've got a minute or two here. Graham, I don't want to steal any thunder if you have a couple opening thoughts as well. And oh, hey, Roger, how are you?
Hey, good, good. How are you? Glad to be here.
Thanks for
I
jumping on
wanted to.
our little session here.
I got very excited about that demo you had in my room last week, and I'm very excited for the launch. I really do think it's just what people need right now with the market being so choppy. I think it's a good way to get those high opportunity trades. So glad to be here.
Yeah, thanks again. Can't wait to get into the weeds on that and show people how it all works. And if you guys don't know, I'm sure most people know because I've been hammering it uh, for the last couple weeks. We're gonna do something very unique today. I'm actually gonna give people a chance to try it for free for a little while. No obligation, no credit card, nothing like that. So we'll walk through that in a minute. But first, we've got some actual trade ideas and thoughts around the market to get to. Graham, anything I'm missing before we kind of kick off and get into that? Any
No,
housekeeping
nothing,
notes?
nothing crazy. It is looking really, really strong. I thought CPI last week was going to help us break through this sort of resistance level we're at, which obviously didn't happen. We faded that news pretty quickly, but today it's looking really, really strong. In fact, if you look at the futures markets, if you type in /ES in your Thinkorswim, you can see just how strong today's candle is, even compared to the SPY. It's looking very, very bullish. So I'm excited. I'm hopeful. I've been calling for all-time highs in June since beginning of May. So I'm hoping we can get there. We got about 2 weeks left. We'll see what we can do.
Yeah, absolutely. All right. Well, guys, there's no formal agenda here. We just wanted to get everyone together because we thought, with the market as kind of chaotic, news driven as it is, we had big news obviously come out Friday. We're in kind of a pretty important decision point for the rest of the summer. Both could be bullish, could be bearish, as Kane was saying. So we just wanted to get some folks on and try to get some meat and potatoes for what we think is going to happen, and more specifically the stocks that we think can do the best under these conditions. So whoever wants to kick off, I mean, go for it. Graham, if you have an agenda, by all means, go for it.
No, I'll kick us off. I'll keep it short and sweet. First one's kind of a boring pick, and I did do a bonus one for you guys, but you guys are going to roll your eyes when you see my first pick. Can you say this guy back at it again?
Tell
Then
me
we
it's
can go Kane,
progressive.
Roger, and Nate. If you want to wrap us up, that'd be awesome.
All right.
All right, so my top pick for the summer, as you guys know, every Tuesday I cover seasonally where we're at, market internals here in this opening playbook 10 a.m. session. Every single day we're live. One thing that we've noticed is that the summer is typically choppy. It's slow. We need to be more selective. Uh, June being a historically flat month, July being up, and then August and September both being down. Now, there is one stock right now that stands out to me, and it might sound a little counterintuitive based on what we talked about last week. But if you look at the financial sector, I told you guys it was a strong one for a while, but seasonally in June, it typically cools off about 1% on average. So if we're looking here at the S&P sector performance by month over the last, 35 years, financials typically takes about a 1% decline in June and then heats up again in July. So you might say, let's avoid financial stocks, which I did say for the first half of the month. However, if we look at where financials are now, this is since the beginning of the month, we've already made that 2% decline actually in financials since the start of the month. So we're actually outperforming the seasonal bearishness to the downside, which tells me that when we look at July, which is about 2% upside, it's not going to follow it to a T. It's not a crystal ball. It's not going to tell you exactly where it's going to go. But seasonally from here, that gives us about 3% upside in financials for the next 6 weeks. So do you see what I'm saying here? Typically, we have a decline. We've overextended a little bit on that typical decline. So seasonally speaking, just looking at the odds historically, we have upside here. So my first pick for you guys over the summer, it's in the financial sector. It's not MasterCard or Visa or even a bank stock like JP Morgan. It's a stock that I've traded over and over and over again. It's my top stock holding in my account. It's been that way for years now. It's a stock that's typically annualized a return of about 14% compounded annual growth over the last 20 years. It's done well in bull markets, bear markets, all sorts of markets. And so I asked my good friend ChatGPT, can you run a report for me on how this stock has done over the last 20 years in June, July, and August? In about 30 seconds, I had all the information I needed. June, it's typically down about 1%. Sure enough, if we look at this stock now, which we had an ascending triangle on it, it broke out. It's down over 1% this month, well over 1%. So similar to this sector, we've already seen a lot of that pain being priced into this stock. And then if we look forward, July and August, it typically returns about 8%, 9% on the upside for those next 2 months coming up. So I see that we have about 10% upside over the next 6 weeks on the stock, as we are also getting a bounce off the 200-day moving average. It's still trading right around that 200-day moving average, but I would set a target about 290 for this stock. So what is the stock? My pick for you guys today is Progressive, which is a stock I always trade all the time. We just happen to get it right now at a great buying opportunity where the seasonals are lining up with the technicals. And it just so happened, I looked at the calendar for the month of my seasonal picks. Progressive is on our calendar for June 24th. It's gone up every single year for the last decade from June 24th over the next 18 days for the last 10 years. So it's a really, really strong stock here in the back half of the month going through July, where it typically rises during that time, and we can buy it today at a discount with a price target of about 290 in mind on the move. Now, if you want to set a target early, look for that 275 range. If you want to just hit a quick hitter, this is the stock I like right here. So again, it's not the most crazy. It's not my Oklo pick where we did about 100% in a couple of weeks on the stock. This one's going to get you about, if it works out, about 10% over the next 6 weeks, which to me is pretty good considering that the S&P, if you're lucky, pays you 10% in a full year. And as a bonus for you guys, I also looked at the technology sector, which has been the one that we've been trading the most over the last couple of weeks, really since the big drop we had with Liberation Day. It's been the top strongest sector, and seasonally, it's our strongest one as well. And today, Amazon is a seasonally strong stock too, where it's gone up every year for the last 10 years from June 16th over the next 18 days. So that's my two picks for you guys. Progressive and Amazon is my top summer picks for 2025.
Can I
Real
ask you
shocker there with Graham.
just a quick question? Are you concerned about Graham? Are you concerned about Amazon and China because a lot of vulnerability there?
Yeah, I think so. I think we should be, but I do also think that we've seen all of the news with China has kind of blown over for the most part since the big news. So yes, there will be news. There should be news, but I think long term it's going to be a good one, and especially right now.
Thanks.
Anyone want to jump in next? Anyone want to take over to the spotlight
Yeah.
next?
I'll go next if that's cool.
Cool.
All right. I'll take over the screen if that's okay. Okay. So, looking at the market from a bigger perspective, you could see right now we had a little pullback on Friday because of Middle East, and you could see the market isn't really buying much of it. But before the Middle East, we were in this little channel that was building over here. And I don't really see a catalyst this week that would really cause us to go beyond that move, especially in light of the fact that we have 2 days off. Now, we do have FOMC, but I don't think we're going to really learn anything in that FOMC, considering that there's a 99.9% chance that the Fed is not going to take any action. So Thursday we have a day off. Tomorrow we're going to have a quiet day. Nobody in their right mind is going to really do much ahead of the FOMC. I'm expecting volume to be low, and I'm expecting us to get stuck here. So I think while the market is looking hyper bullish right now, I'm not really seeing a major reason for us to get above these levels. Those levels are, let me see where those levels are. Right around say right here, right around 604.5. So I think we're going to stay relatively choppy and have a maybe see some sector rotation coming out of tech and into blue chip stocks, which is what we've seen the last couple of weeks, especially in light of the global friction, the added global friction. But I do believe we're going to stay in this range until there is a catalyst. Now, looking at it from let me just pull up my TC2000 real quick. It'll just take 1 second. Here we go. Well, while we're doing that, let me just talk about this. Oh, there we go. That was fast. Okay, here we go. As you could see here right now, the most speculative sectors are getting all the love. Technology, consumer cyclical, financial. So things are looking really, really good right now, but I would be really, really cautious. And for this reason here, let me go to the other side. If you look at the SPY, you'll see we went below the 8-day MA. Now we're back above the 8-day MA. And this is the area here I'm talking about. That we may just get stuck here for a while. And if we get stuck here and not really go anywhere, you don't want to be buying breakouts. You don't want to be buying this gap and go on a Monday. So I would be really, really cautious here because the news this week can be two-sided. We have a lot of fragmentation. Also, if you look at the bond market is right between, it was right at the 8-day EMA. And usually when bonds are right at the 8-day EMA, they tend not to give a lot of directional bias to the stock market. And when you don't have a lot of directional bias in the stock market, you're not really going to move very far. If you look at the mega caps and everything like that, they're coming above the 8-day. But again, they have to get above this level to really fly out. And we're not above that level. So we can very easily just turn down right now, come back down to the 8-day EMA, and look very, very choppy for the foreseeable future. Kind of stay in this range, which would echo exactly what we're seeing in the bond market. So be very, very cautious. Lastly, before I give you my stocks, take a look at volatility. Volatility's down too. We're down quite a bit, but we're still in the high 18 levels. We're not really at 15 or 14. The market right now is very, very cautious, extremely cautious. We don't know what Trump is going to say next, whatever that may be, and we don't know what's going to happen from the Middle East. So I would be really careful while volatility's here, and I would be very cautious about consumer stocks like Amazon. I like how Amazon is looking. I was looking at it when Graham was looking at it. I like how it's breaking above this area right here. The problem is if you put the VWAP right here, I would want to see a confirmation above this level. I don't think we're ready yet. I need to see a confirmation. Once we get a confirmation above this level, I think we'll be better. I wanted to see it go above this level, touch this level, and build a base. And my high would be here, 218. So it doesn't have that much room. It has some room, but not too much room. I would stick with stocks that are not as cross-contaminated with China right now because we just don't know what's going to happen there. And I would also be cautious with retail stocks right now because retail is not speeding up, it's slowing down. Matter of fact, this morning it was the weakest sector on my stock fetch earlier. Let me show you. Don't know if it's still doing that, but going into this weekend. And I can go back with my time machine and show you what I'm talking about. There you go. So right there. That's the last 5 days. So I would be really cautious with retail right now. And as we know, Amazon is a lot of retail. Simply because I love Amazon. I like how it looks, but I would be cautious because of all the stuff going on. Now, as far as stocks that I really like right now, I like CCJ because Wall Street has moved on from the whole AI spiel to utilities. I mean, I love how chips are AI, and I love how utility stocks have become nuclear stocks. I mean, marketing is everything on Wall Street. But here we are. So I like CCJ. This stock is highly involved in nuclear energy. Oh, you don't see my screen?
Yeah, we
I
do.
can see
It's
it.
Yeah.
it looks
Oh,
good.
okay. All right. That's what I thought. So you could see the stock doesn't really have much overhead resistance right now. It's at a new high. And again, part of it has to do with whenever you see a sector get rebranded, when utilities become nuclear stocks and chip stocks. Remember when chip stocks all of a sudden became AI stocks and AI went on a run for 2 years? Well, utility stocks are now nuclear stocks, folks. It's the funniest thing I've ever heard. But um, but again, the stock is a major catalyst right now, and it's got a lot of Wall Street backing it because when Wall Street hears nuclear, they're just writing checks right now. It's happening with Oklo. It's happening with a lot of stocks. So this is one of them. I like that stock right now. I like Roblox right now. I think the stock has a lot going for it. It's had very few down days. I would like for it to come back down to earth to the 8-day, but I really like the stock a lot. And I like Palantir because Palantir was able to get above this area here, which I didn't think it was going to be able to do. So I like Palantir, I like CCJ, and I really like Roblox. Now, would I be chasing any of these stocks? Absolutely not. As I mentioned earlier, and I'll be done in just a few minutes, Nate. I won't take much longer.
You're good.
Um, but again, my problem is that we're in the structure right now in the SPY, and we all know that stocks are extremely correlated, especially large cap stocks that I'm looking at. They're very correlated to the market, and if the market can't move beyond this, if we fake out right here or a little lower, here, let me just make this that right here, we can just end up being in a channel without much directional bias. Also, and this is the last thing I want to share with you guys. This is really important in my opinion. It's really important. If you look at the number of stocks right now making 52-week highs, there's 74 stocks. Now, I usually have anything less than 100 on this list means there's no momentum to the upside. Look at how many stocks are making 20-week highs, 43. If this doesn't have 100, there's no momentum. There's 72 stocks making 50-day high. That's a 2-month high. There's not really much anything. None of these stocks. To the downside, same thing. Now, if you look, I want to show you this. This is the most interesting one. Look at 20-day high. This is 1-month highs. We're at 150 right now, but look where we were a few days ago, 321 and 403. So momentum is not really pushing right now. It's not there. It looks like there's a lot of momentum right now, but internally under the hood, there just isn't. And I'd love to tell you there is. Now, lastly, before I go, I want to look at volume. Volume right now is at 14 million. The average volume for the last few days has been about 86, 87 million. Volume is dismal right now, and I'm expecting it's going to be dismal this week. Without volume, you're not going to get a lot of directional momentum. So be careful and don't chase stocks right now. If you think the market's going to break out, that's great. Wait for pullbacks right now. All right. And also, before I forget, the most important thing, the reason we're here, folks, the tool that Nate came to my class, I think it was Thursday or Friday, and he showed me this really cool tool. And it's really cool because it gives you choices. It gives you 3 different choices, and I love how it's made. I'm a little jealous. I think it's a really cool tool, and I love how it was designed, Nate. So please check it out. I think it's really great for these market conditions, and I think you guys are gonna love it, love it, love it. And the fact that it's free for a limited time, I don't know what else to say. All right, I'll. Sorry I took so long, but I there was a lot to talk about this morning.
You're good. Thanks, Roger.
Yep.
Lance, you want to go next?
Sure, Nathan. And I can't wait to use your tool today. Let me grab the screen and then we'll get rocking. So my number one name is, and of course I have a position, so I'm talking my book, and the option pick is Boeing. The industrial sector is really looking great today. So we picked up some Boeing. If you look at XLI, which is super strong today too. I agree with Roger. I don't think you want to go out and chase, especially these kind of high flyers today. Like Roblox does look amazing, and some of those nuclear stocks, they're all top on my watch list here. But I think you want to go a little bit, so I guess conservative, you can say, to speak a little bit. And if you look at the top holdings in the XLI, you're looking at GE, RTX, somehow Uber. Funny
I love
enough.
that Uber's in there.
Yeah. But Boeing, Honeywell, a lot of these names, RTX, obviously, defense with everything going on right now, but XLI just, kind of a sleeper. It's up a little over 1% today, but, you don't have to go and chase, the next Oklo, for example, where you're going to have, crazy 8-point moves intraday. The stock's already, 5 off the highs or so. That, in my opinion, is very difficult to do right now because you're having literally to time everything perfectly. So instead, I prefer kind of a slower trending stock like Boeing. It's not going to have anything too crazy. Like the weekly 205 calls aren't too bad. And then also old tech. Cisco got upgraded today, having up about 2%, super strong. But also Microsoft. And the reason why Microsoft, again, super strong, is we've seen 46 million. This is a daily chart. I mean, it's just grinding higher.
Yeah.
46 million. And then today we saw 16, really 17 million in the January 520 calls. I feel like every couple of days we see another, 10, $20 million Microsoft bet. The first one was 20 million in December 500s. And, that was May 22nd. So
Jeez,
way back in here when it was about 454, and now it's 480. So they've been pretty spot on and throwing a lot of money at Microsoft. And then, I think that whole If you get like OpenAI and those stocks, maybe going public later this year, obviously you're going to have a big correlation. Just like, I mean, look at the IPOs like Circle, insane moves you're seeing. That stock's up $30 a day. I mean, you can't even chart it. It's up so much. So I think anything to do long term, kind of in the safe, old tech, I should say, not maybe the high flyers. The old tech's getting a nice rally, Cisco, Microsoft, even IBM. And not I don't think you want to do anything crazy because the markets are very bid up and volatility is very low. So I think you need to be a little bit careful. And I know you gave away, Nathan, Cisco, what was it, Friday?
We did Friday, Cisco.
So working really good. And that kind of falls right into the Microsoft
Yep.
talk that, old tech and everything like that.
Nate, was that one from the income machine?
That was an income machine play. It was the number one rated for income machine on Friday. We did a little aggressive play on it, and it's up nicely. So
Yeah.
if you guys were on Crush the Close on Friday, you should be should be in good shape.
Yeah, and you can do super, aggressive, conservative. Obviously, I prefer the super conservative.
Yes, of course. Lance, it's always good to have you on to talk about all your conservative plays and your income approach. That's what we rely on you for.
And by the way, if you're looking at SPX, I think we pinned this week at 6,000, 2,500 open interest on the calls and puts. So I did a little bonus trade today on there. So again, keeping it conservative.
As you always do. That's what we trust you for. Kane, you want to take it from here?
Yeah, let me do that. So Zoom user is asking what everyone's been predicting so far. So I'm not too different than the other guys. So whatever you're going to hear me say, the other guys pretty much said as well. If we look at the S&P 500, we are in this chop and we do have resistance overhead. Let me move some stuff out of my way so I can see what I'm showing you guys. The all-time highs are not that far from where we are right now. So if you just looked at the trend, you'd be like, hey, maybe this trend is pretty strong. We could go right up into those all-time highs. But then you're forgetting about this choppy period over here and over here and over here. So we are really in this kind of thick resistance zone right here. So I wouldn't expect it to just go flying up to that all-time high. I actually expected that after Friday's movement, we might come down more to maybe this EMA 20 to this area of support right here before we bounced and went back up. But today's market is today's market. Now, what I want to emphasize though is even if we are just looking at technicals, we're looking at this kind of resistance and choppy period, especially if we're looking at just this week. We're already looking at that, but then you've got the holiday on top of it, an expected low volume because of that holiday. You've got FOMC, so today, tomorrow, you're probably not going to see institutions really move a lot of money around, even though we're basically 99.9% priced in that nothing's going to happen. You're not going to see money really get moved until we actually get that decision. And if it is what everyone expects, which is 99.9%, then everyone's already expecting it, then that's not really going to be a market moving event anyways. This Friday is also quadruple witching. So if you're going to see volatility, you're going to see it on Friday towards the end of the day. And it might be heightened a little bit because you have a lot of people at institutions who are taking the day off to make it an extended holiday. But then you got that quadruple witching happening all at the end of the day. So I would really pay attention to volatility on Friday. But what that means for me is I can't really take, unless it's a really compelling long, I can't really take a long because I have all that resistance above me. I'm talking about this week specifically. And then if I'm going to take a short, well, there's not, I'd be going counter trend on today is already proving to be a very strong market. So I wouldn't really want to do that either. So my best option is a non-directional play, which means some sort of spread. And I believe, I don't know too much about Nate's tool. I'm excited to see it and maybe use it, but I believe that's what Nate's tool is helping you with because he's been talking about income. So what you really want on a week like this that's going to be muted and probably not super directional is that you're going to want to look for those non-directional plays. Use a software tool like Nate has to help you identify those plays. And then if you want to pick a direction for it, just in case, because we are still in a news-driven environment, well, as Lance was saying, you probably want to go for those more conservative plays this particular week, just because that heightened news risk. So if you are going to look for something, it's got to be very, very strong relative to the current market, because we're just projecting flat for the market, or it's got to be super, super weak. So I'll show you a few that I had lined up, and some of them already moved this morning, like Palantir. That's kind of went up too far. I wouldn't be chasing that. I also have Groupon on here. Same thing. It already moved. We've got Spotify. I actually kind of like Spotify. It's a nice, steady revenue stream type of model. Is you're not looking for a brand new product, a huge launch or whatever. We all know what Spotify does, and they're relying on those subscriptions, sort of like Netflix. Those subscriptions, those predictable subscriptions. And then metals are moving, I think. So the XME, the metals and mining, that gapped up. And I also was looking at Micron, but I'd be careful because SMH, I think, is more, SMH, the semiconductors, is a little bit more flat. And so I would be careful until we break resistance levels right here, this high over here. So around 270-ish, looks like. I would be careful, but Micron does look really good. And then the one that I'm going to pick as my one favorite one is actually ATI. And similar theme to Palantir. ATI, actually, they do specialized materials that are used in planes, in aerospace, in defense. So this is playing off of the theme of, hey, if we have escalation in Middle East, ATI will do well. If we have de-escalation in the Middle East, well, ATI has been on a tear. So Wall Street has been loving this even before the huge amounts of dramas started to escalate in the Middle East. So chances are we're going to continue to love it, even if we have de-escalation. So ATI is my pick, but again, this week I would be focusing on the fact that we're probably going to be very choppy. There's not a lot of things that are going to be moving this market, and unless some sort of weird news comes out, and I'd be looking at those income plays.
Love it. Thank you, Kane. Obviously, a lot of us are saying the same thing. We brought Lance on to say something different, but then he said the same thing anyway. So
I'm too conservative right now. I agree. I agree with Kane and Roger. I think on the big gap up, you don't want to go be chasing, if that makes sense, especially Fed Wednesday, Juneteenth holiday Thursday. I think, like Kane said, do neutral spread techniques and just got to get a little bit.
Yeah, well, I obviously agree as well. I'm going to beat a dead horse here because this is what I've been talking about and what I'm excited about. By the way, Lance, you mentioned Honeywell. It actually made our top 3 today on the income machine, by the way, as an opportunity. And so, guys, I know a ton of you are here waiting to figure out how to get free access to this thing because that's what we've been talking about. We'll get there in just 1 minute. Let me just cover generally a couple quick things and then tickers that I think are interesting to do it. And then we'll get in. And then you can get the actual very specific plays by going into the income machine here very shortly. But what I like right now is, a stock like Progressive, which, as Graham mentioned, it's a stock that I love. I think it has a great opportunity to bounce here, but I don't trust to get timing right now. I don't trust that, this week's going to be a 2% move on Progressive. I think it could, come back in and retest up into 255, 260. We could get the bounce. It could go nowhere. And so instead of picking the timing, I like putting a trade somewhere down here, which I would consider like a defensive income trade where I give Progressive room, or maybe even give it a little more room and basically say, like, unless, the craziest thing happens, I'm going to make money on this trade. The problem with these kind of trades that I think most people run into is if you just say, hey, I want to trade next week's expiration and I want to put a defensive trade on, the risk to reward is not very good. You might make like 3% on that trade, because to actually find really good opportunities, you have to dig through, thousands of options combinations on progressive stock and figure out which expiration date with which strikes. Do I go 2 wide, or 250 wide, $5 wide? What do I do? And so that's really what the income machine is designed to do, is say, hey, forget this one. It's actually this other one down here that you probably never looked at. By combining this strike with this other strike and going out 3 weeks instead of 2 weeks, now you can make a 20% ROI trade, even if progressive comes back against you. And this is kind of what I think is, the best opportunities in all of trading are these defensive opportunities where you give the stock lots of room for error and still make good bang for your buck. And so that's really, to sum up the way that I'm trading right now, I'm trying to trade in a way that gives me room for error. And so trades like progressive, where you can trade in the 240 or 250 range and still make money. AVGO, another one. I'm going to cover a couple different sectors here because, progressive, obviously financial, insurance stock, AVGO, tech stock, which I think is one of the best right now. But you can see what AVGO has done. I don't necessarily want to take a directional trade here and hope it can go from 10 green bars in a row to 14 green bars in a row. Instead, I want to say, hey, I think it's strong enough that even if it pulls back, I'm going to stay above 240 or 235 and still make, a nice trade on this. So don't buy a call. Instead, pick a line in the sand down here and only do it on a combination that's going to make you a 25% plus ROI, where it's actually worth taking that trade, and then, use the income machine to find that opportunity. Walmart's another one. Again, Walmart's a little dicey right now. Don't love it for a directional pick, but hey, if I can get below here and trade it at a $90 level and give it 2 weeks to move and make 30% on Walmart, then all of a sudden it takes it from a trade I don't want to take to a trade I absolutely would love to take. And again, that's what we'll do with the income machine. One more example here, Mag 7. You guys know I've been talking about the Mags now for, I guess, going back to the Liberation Day recovery. I think this market is being very resilient. It wants to move toward all-time highs. The Mags, I think, are leading that charge most days. But a new headline with Israel, and all of a sudden we're going to be in deep trouble. A new headline from China, all of a sudden Mags look ugly. So what do? I trade it down here at $50 and try to make a 30% ROI, as long as one of the, because the great thing about the Mags, by the way, this is just ticker MAGS, which a lot of people don't realize is a ticker, but you can trade it directly. One of the things I love about trading the Mags is, especially on these income positions where I just needed to break even or do something, pretty minimal to get a win, is you can have a pretty slouchy day in the market where it's break even, you're down 0.5%, and then, Tesla's up 6% on the day, and now the Mags are positive. Or Nvidia, new headline, they're up 6%. That can obviously go negative as well, but generally speaking, when the market's looking for reasons to be optimistic, one of these mega caps is going to give you something optimistic. Microsoft has been an absolute monster, just grinding, adding $100 million of market cap every day for 20 straight days. And so you have enough of those big mega caps to keep you in the game here. So I really like these income opportunities on Mag. So that's just 4 quick examples: progressive, AVGO, Walmart, and Mags that you can do that with. The reason I'm not going to give you a specific option right now is because within a couple minutes here, you'll be able to use the income machine and find your own specific options, and you'll be able to do that for free. So hopefully just getting a quick idea of some of these stocks and the ones that we like is a good precursor for what we're actually going to talk about, because I think we all pretty much agreed that if you can trade this market more defensively and with, good risk reward, and give yourself room for error, that's probably more the approach you want. And that's exactly what we're going to do with the income machine. So I'll switch to that, guys, unless we have any final notes here, and we can actually get going here and tell people how they can get access. Let me just set that up for us, and we'll get down into the weeds here on how this all works. We've been talking about this for 4 months, 5 months. And so I am